All right, we are live. Let me add Steve. These guys went into the wrong link at the last
You
second.
know what?
It's not
That's
even my
it.
fault.
Yeah, of course that's your fault.
I blame Steve.
100% that's your fault.
Steve misled me. Just kidding.
No, Esteban, it's not my fault because Roy posted the last link, which was
No,
the
no,
PayPal
no.
earnings.
Stop. There is a private chat that is titled. It is titled
Yeah,
the official bootleg weekly
like
chain.
I know. I titled it.
Okay. Their link is right there. And I clicked the link.
Mm-hmm.
Is the link
Mm-hmm.
not right there?
It is right there, but
Okay.
the other point you're missing is that Roy is also part of that group, and Roy was the one that posted that link. So
It was a bootleg of the bootleg stream. So sorry.
I wasn't late. I'm just saying that. I'm not Tanner.
yeah, I try not to be Tanner today by not being late, but thanks, guys. um, okay, Roy, how are you feeling coming out of that PayPal earnings?
The numbers were good. The guidance was very soft. Very, very soft. And I have to like look through and figure out why did I understand. So they're not baking in a lot of things. They're baking in certain macro, but still, it's like, man, they have buybacks. They've had these layoffs. Like, why is the EPS so soft? I don't know. Like, is it just like an epic level of sandbagging? It feels like this is going to be a longer turnaround story based on the guidance. Quarter four numbers killed it. Like, they killed it, and they just kind of didn't mention it. They were just like, let's just move on and let's look at this subpar guidance. It's like, pound your chest, be excited. Like, you did it, guys. And there's still work to do, but come on. So
I feel like now Carp is setting a new standard of like banging on the table and using fucking terms like bombastic on earnings calls that like Alex Chris needs to take notes. But I mentioned this, I think a couple of maybe weeks or months ago when we were talking about Alex Chris, and I said, look, we're getting this new guy, and he's largely unproven in the context of PayPal, and as a result, really the market doesn't know where to baseline, but they're hopeful, they're optimistic because of how beat down the stock is. And it just seems like he wasn't really a strong presence in the Shock the World event, and he wasn't a strong presence in the earnings call. And I don't want to be too hard because you can't really turn around a company in 90 days. I get that. But at the same time, I think you can establish a strong presence to get the market hopeful of that turnaround and to get the market to essentially buy into your vision from day one. And I don't think that he's doing that so far.
no, it feels like, and we discussed this elsewhere, that First Look, I thought First Look was actually good. Like, he just should have said something a little bit different. People took it out of context. Maybe should have not said revolutionize commerce right there, or I don't know, whatever. The actual presentation, it was perfectly good. I think there's a lot of exciting products there that will be launching in 2024. Yeah, the issue was like I think that there was a lot of pushback from that. Of course, the algos were going to sell it off no matter what because nobody can go through that in like 2 seconds, and it just dumped in 2 seconds. But I think that when people said, "Hey, Alex Chris, no, you need to underpromise and overdeliver," he's like, "Okay, I'll do it to the extreme then. If you want that, here you go." And so this was like the extreme underpromising, muted tone, and it just was like, not like this though. Can we not do it like this? Can we bake in like a little bit of excitement? But it is what it is. The numbers are good. I still believe in PayPal. I think that they'll do well. But like I said, this is the roadmap quarter. Not as good as I hoped as far as the roadmap, but they have to execute from here on. If they execute the next 2 quarters, I continue to be excited. I continue to be in. If they don't, if EPS is where it's at or even revised down, I'll start taking some off the table.
Yeah. Steve, thoughts?
I'm going to try to be nice.
I mean, look, man, don't try to be nice. He's a Fortune 500, a Fortune 50 executive. Like, you don't have to, beat around the bush and worry about you're going to hurt someone's feelings. Like, this guy is literally paid top dollar to be ruthless And that's the expectation from the market.
I'm going to try to be nice.
Okay.
Okay. I believe there is a lot of value to unlock in these shares. I am a shareholder. Everybody wants me to blow up. I'm going to try to be nice, but I may blow the fuck up.
Do it, baby. This is Bootleg Weekly. We don't give a fuck.
Okay. Alex Chris needed to come out and he needed to wow everybody. He needed buy-in. He needed to get everybody to buy in. If you ever go to an executive conference or if you ever go to any type of presentation, you don't want somebody that's monotone. You don't want somebody banging on the table like Harp did in that one quarter where I was like, I'm giving them a year and then I'm out if he doesn't change. But if you go look at Steve Jobs, you go look at some of these people that inspire you when they speak, that is what we needed. And whoever wrote the prepared remarks needs to be freaking put in a room and say, write something that is more enthusiastic. I ripped through the transcript very quickly. I'm going to read a few things. Please do not freaking write this. Like, this is ridiculous. Quote, we want to see execution and clear results prior to embedding these initiatives into our financial outlook. As a company, we will build back a track record of delivering on our commitments, end quote. So what are you telling us? That you guys have no track record of delivering on what you guys say? Like, strike that from the remarks. Don't put that. Like, what are you doing? 2, quote, we've had limited penetration of SMB full stack processing to date due to a lack of a strong product, but that is now changing. November and December were record-setting months for new SMB adoption of PPCP. You can reword that, and there is more afterwards, and get rid of we've had limited penetration of the SMB full stack processing to date. Like, strike that, reword it. Next one. Quote, the first is we really have to improve the value proposition for our consumers, end quote. So what are you saying? You guys don't provide value for your consumers? You want everybody to go use Visa and MasterCard and not use PayPal? Go direct through Apple Pay? Like, what are you doing? Don't put that in there. Don't say that. Next quote.
So I love the quotes, but I think we get the idea.
No.
It was boring as fuck the first time around. I don't really want to hear it the second time around.
No.
Okay, go for it. Last one.
We got to get into Palantir.
I got 3 more.
Oh my God, fuck.
Come on, they're quick. Yeah, and Mike, on the other part of your question, I guess what I'd say is we are just doing too many things. So what are you saying? You guys don't, the management team didn't know how to manage you guys, but you don't have to say that. Next, and I cut that one. There was other stuff. I cut that one down. We have not invested enough in creating a single platform. That again slows us down when it comes to innovation. And it slows us down when it comes to being able to leverage the data across the ecosystem. Why are you admitting to these things? Why are you putting this out there? Stuff that you don't have to say. And the last one, we are not putting in the expectations into the guidance until we see execution. So what are you saying? You don't even believe in yourself that you're going to execute? Like, this was one of the worst conference calls I've ever heard.
Yeah, no, I could have told you that right after your first fucking quote that it's going to be one of the worst conference calls. But like, again,
because did you read my tweet? Did you read my tweet?
I skimmed your tweet.
He needs to come out tomorrow on CNBC and say, look, we have $9.8 billion in debt long term. We have about $18 billion in liquidity, over $9 billion cash on hand. The market sold us off. I think that I was taken out of context, and I think that, oh my God. And I think that the market misinterpreted the message that we were getting across. So hear me loud and clear. In addition to the $5 billion buybacks we will be doing throughout 2024, we're going to write a check for $5 billion right now from our cash on hand. And we're buying back $5 billion worth of shares right now because we don't feel that we deserve this valuation. Draw a line in the sand and freaking take a stand.
Yeah, but even that alone, if you look at it, $5 billion buyback, that's like almost 10% of their entire market cap that they're buying back. The market should have been way more excited about this earnings than they were. And I think that the fact that they weren't is contributable to the fact that he is not, again, putting his foot down and saying,
if they believe that they're going to freaking do great things, they have all the cash on hand, they have limited debt.
Yeah.
They are not hurting themselves because they're not touching anything that's in short-term or long-term treasuries. Okay. Take $5 billion and buy back shares, then you have another $5 billion to do more share buybacks throughout the year. Send a clear, definitive message that this quarter was taken out of context.
Yeah,
and that senior management believes in what the hell they're doing.
And it's sort of a discrepancy, right? Because the numbers were so good in themselves.
So good.
Even the margins that I thought were going to continue to decrease actually turned around, which, Roy, I'd love for you to talk a little bit about that. And so they beat on all the major metrics. Guidance was soft. Yeah, but I mean, it's not a huge deal. Again, with the whole under-promising, over-delivering narrative, I just think it's entirely this guy's approach, man. So what I love about Alex Chris, I love that he took that Anthony Noto stance to personally have customer service, to go on X, to respond to these people, to actually have a more personal touch. It makes the retail investor feel as though they have a connection to leaders, that leaders are listening to them. What I don't like about Alex Chris, we're going to shock the world. It's a fucking recorded YouTube video. We're going to do earnings. It's a pre-recorded, prepared remarks. That's not even that exciting. Like, man, Palantir is over here recording themselves on their earnings call. You can see all of their mannerisms. You can see how they respond and react to analysts live. Like, it's another level of transparency. And I think that builds a rapport and a trust with the market that I'm just not feeling over here with PayPal.
Yeah, live is for the investors, and the more live you are, including video, the better. Minor thing, like, somebody mentioned in the comments that they were down like 2 or 3%. Which, I mean, they honestly even shouldn't have been at that point. The earnings were really good until the earnings call began, and then it just started dumping and kept getting worse. I don't know, it went up down like 8 or 9%, 10%. But yeah, I agree with Steve. I think that he should probably go and have appearance and just say, hey, do some damage control, just like one of the comments says there. Just say, hey, this is baseline guidance we're offering. We will, as we roll out these products this year, which will begin to hit in Q1, revise our expectations and guidance accordingly. We are free cash flow positive, and the market is undervaluing us. As a result of what happened yesterday, because we are so severely undervalued, we're doubling our buybacks now. We're going to ramp that up to $10 billion. We know this company will grow. It will take time to implement some of these things, but not as much time as the market is giving us credit for. And we want to be clear to investors. This company is growing. It's in good shape, and it's not being priced like a growth company. Yes. If this continues, we'll continue to implement our free cash flow aggressively, and we will take measures even up to and including considering going private. Done.
This is so infuriating because the numbers are so good, and the company does not deserve this valuation. And I am not saying the company should be at 150 or 200, but it should not trade at less than 12 times 2024 earnings based on where shares are post-market.
Right, exactly. Yeah, it's way too cheap. And I mean, the thing bounced immediately. I think there was one comment there on the actual numbers themselves and immediately gave back all those gains and just started sliding throughout the call. Like, I think, Roy, you nailed it. Like, just put your foot down, make a stance, and be like, hey, we know the situation. We see the same picture that you guys see. Here's what we're doing about it. Because right now it seems as though they're still, playing it very cautious and with the underlying assumption that, hey, in 12 months or in 18 months or whatever, we are eventually going to turn this ship around. And that's not what retail wants to hear. This thing's been beat down for quite a while now.
Forget retail. You don't say what he said on a conference call publicly. Yeah. You just don't say it. Like, the numbers are not supporting what he said. The numbers were really good. Guidance is good. Okay. There's a much better way to write this. There is a much better way to present this, especially with all the analysts on the call. And this is your first conference call. This guy gained zero credibility. Nobody has faith in him now from that I've talked to. My phone's been blowing up. Nobody's got faith in this guy. I mean, it's ridiculous. It's absolutely ridiculous. I mean, it's just
This was fine
infuriating.
the last quarter. You know, that was the what's wrong with PayPal, the diagnosis. And you can come in and he said some things that were very transparent and clear, and I appreciated, where it's like, we've not done enough with this. We need to right size this. We need to improve our margins here. And next quarter, we'll talk about how to do that. Good. And he did that, and it was great. And this quarter, he should have just focused on that. Okay. Not like we're not doing enough. It's here's what we're doing about these things that we talked about. Here's these 5 KPIs. Here's where we're going forward. This is baseline guidance. Things are turning around at PayPal, and they'll continue throughout the year, and you'll see that.
Yeah, and I got one thing I want to address. I don't remember who said it on Twitter about me, but they were basically saying that everybody who is mad right now is just YOLOing options. Okay. I don't own any fucking options on PayPal.
I do.
Actually, I would be screwed if PayPal went to 80 or 90 because I have covered calls written at, I think, 75 against my shares. So it would not benefit me because I would either have to have them execute at that price, and I would lose on the extended profits if it went up, or I would have to roll out of them and it may actually cost me money. So I am not mad because I own options. I actually have capped my profits because I wrote cover calls to manufacture income. Like, I'm not mad about that because I believe in PayPal. I am mad because this was so bad of a conference call when there was so much good information and there are so many good things that PayPal is doing. The delivery was dog shit.
Yeah, highlight that Simon comment there. The first earnings call he delivered, it was, if not the best, it was one of the best earnings calls I've ever heard, ever. This one, I disagree with Steve that it was, as bad as it was bad though. Like, it was as a D grade. Like, I've heard F grade earnings calls. This was not quite that bad.
Okay.
But the numbers, like, so last quarter,
give me a worst conference call in the past year.
Elon's literally last week.
And Carp's 2022.
Carp's 2022 is right up there. And I don't even know if I think Elon's was as bad as this one, to be honest with you.
It was pretty bad, dude. But either way, I think this wasn't as bad. Like, so, but quarter 3 earnings, like, the actual numbers were solid, not amazing. They were okay. Quarter 4, man, they just hit it out of the park. So it was like, dude, if we could marry up like last quarter's Alex Chris with this quarter's results, it'd be great. But they didn't do that. So tone matters.
Yeah. And I think, like, again, we're not looking for you to have all the answers. We're not looking for you to turn it around in 90 days, but we are looking for confidence in a new direction. And all the puzzle pieces were there, man. All the chess pieces, right? Like, you put in your own people in C-suite. You started hiring your own leaders to lead your own departments, internal verticals. You laid off
Derek Wall's tweet.
You laid off 9%, just like of your staff. You talked about, hey, in 60 days, we improved the rate of all of these features powered by AI. This is our exciting direction. Like, just fucking talk about those things, promote them, and get the market excited, get analysts excited about, hey, where could we be? We turned around margins, guys. We did this, we did that. Like, don't sandbag guidance. This is not the time for that. Whose tweet?
Derek Wall.
I haven't seen it. Do you have a link? What does it say, basically?
Yeah, I mean, this is an XBuy. I don't know. XBuy.com, Rakuten, bunch of other things. I could do a better job. Hire me, PayPal. I would work for free and make this a $400 to $500 billion market cap company. From being a CEO of a subsidiary of Rakuten with combined assets of over $1 billion, et cetera, et cetera. He goes on, just blast Chris. About his enthusiasm and everything else.
That sounds like a tweet that I would write, dude, or Roy would write. Like, yeah, I'd work for free, be their CEO, and like just pick off the low-hanging fruit,
Like, this is I don't know.
I still believe in Alex Chris. Like the pedigree, the diagnosis, and the vision, I think all match exactly what PayPal needs to do. But this was a big misstep. He hasn't learned yet the differences in his roll it into it versus now as far as it being a CEO. I think internally he's doing things very well. Externally, he needs to work on that.
There's a better way of holding a call. I have no doubt in his execution ability. I have no doubt that PayPal has the firepower to do what it needs to do. It's just whoever wrote this, that's the problem. The delivery of the earnings call. It's not the numbers. It's not what they're going to do. It's the stuff that they said publicly that they can't take back now.
Yeah. Yeah. I think I want to bring up this comment. Maybe he's not sandbagging guidance. Like,
we got a big problem if that's the case.
But exactly, right? This is the type of shit that the market is now thinking about is, oh, wait, what if he's not sandbagging guidance? What if, like these types of thoughts enter people's minds because of the sentiment, right? And I think that if the tone was a little different, if the words he used were a little different, like it would just be a completely different sentiment from the market.
Let me ask you this. What do you think if Noto was running the company? What type of conference call would this have been?
Oh, come on, man. Like, that's not even a question, right?
No, but seriously.
But, like, dude, listen to all of Noto's closing remarks. It is a big double middle finger to everybody out there on the doubters. He's like, I'm super proud of the team. We've been executing. We've been killing it, and we're going to continue killing it. Thanks so much for being here. See you in 3 months. Fuck you. Like, that's Noto on the call. This guy, like, dude, I heard this fucking robotic British lady for more than I heard Alex Chris.
Him and the CFO were acting like they were on freaking probation. And if they step out of line or question anything, they're going to get fired. It's like, you're the CEO and CFO of the company.
Yeah.
You're not on probation.
Yeah.
Like, you don't need to walk on eggshells here. You need to be confident. You guys are leading the ship. Make all of us believe in you.
So, speaking of that, we have a very special guest to bring up on stage. Mr. Matt Money.
Is this Bootleg Weekly or Good Looking Weekly? I don't know.
He's got a lot more good looking in here with you on.
That's right.
Your check is in the mail, my friend.
It's 3 Palantir bulls and 1 hater. So.
Oh, who's the hater? Did Uncle Steven become a hater overnight?
All right, motherfuckers. Do we want to go there? Do we want to talk about this shit?
We are going to at some point. Are we done with PayPal? Do you want to have some comments on PayPal, Matt?
I don't want to hate on anybody. I really hope that the things turn around, and I really hope that you guys end up on the right side of this thing. I'm still optimistic for you guys. Sometimes you have to, the way that I looked at it was, I'll wait for a little bit. I'll lose out on a little bit of the growth of this thing. And once I start seeing some real fundamental change, maybe I'll hop on the bandwagon with you guys. But until then, I wish you guys the best. I really hope all of you guys, I have a lot of good friends in PayPal, and I hope in the end things really do well. And I am somewhat scratching my head because the 3Q earnings call that I heard from this guy, I didn't listen to the 4Q, so this is coming from ignorance, but the 3Q earnings call that I heard from this guy made it seem like he had a baby's arm between his legs, and now it kind of seems like things have lightened up a little bit with the show the world, and so hopefully things in 1Q get back to full swing of things, and you guys end up at the right side of this thing. I'm really pulling for you guys.
Well, and for the record, I'm still up. Like,
Steve, no matter what, the stock could be going to zero and you still be up, my guy. Look at you.
I mean, I'm still
in life, you'd still be just up.
I'm just freaking mad because of the potential that this has. And you know what? That's not a bad idea. If PayPal was to buy SoFi and put Noto ship in place, this would be a $200 stock in 2 years.
Oh.
It could be, honestly.
Is Steve fighting for chairman of the board? I think that's what I just heard.
Like they need execution and they need confidence, and I think Chris delivers execution. I think his confidence was shook.
Have him be COO.
Yeah. But no, like seriously, like what they're implementing and the fundamentals, I think it's there. But I don't know. You have to actually have that. You have to have a bit of showman and performance. And Chris has done that in the past, but not on this big of a stage. So I don't know. Hopefully he gets it together, gets a little bit of coaching. We'll see.
So
But yeah, if they're not sandbagging,
Palantir.
yeah, let's go
Get
there.
into it because I'm just going to get too frustrated with this.
Yeah.
Tell
Yeah.
us about
Oh
Palantir.
yeah, because Palantir is a chill fucking topic that you're not going to get frustrated with. Get the fuck out of here.
I
All right.
support you.
Yeah. Okay, so here's the funny thing, man. Like, first of all, Roy, fuck off with the 3 bulls and a bear. I never said I was bearish. I specifically was just like, hey guys, I'm taking money off the table and like wishing you all the best of luck. But the funny part is that I knew some motherfucker was going to bring up that video of me selling like immediately after earnings because Palantir cult are so fucking salty that they cannot be happy with themselves making money and me not making money. They have to then go back 3 months to find a video just to dunk on me on Twitter. Man, the thing is, I think I've gained more followers that are Palantir bulls after selling Palantir than from holding it for like 2 years. So I don't know.
I don't know. The first and foremost, Tevis, how dare you? And then second,
fuck me.
That's right.
And then second, in reality, don't dunk on anybody. I'm sure that SoFi will do phenomenally well. I think it has the makings of becoming a phenomenal bank, and I still think that there's much to be gained there. And I think a lot of people should really it's not a quarter by quarter race, right? Everyone's running their own race and everyone's looking for what makes them most comfortable at the end of the day. It's personal finance. And hey, I think that, you guys with SoFi, I think you guys are onto something pretty big, and Palantir might be up this quarter, but SoFi might be coming up next. So we'll see.
Yeah, and they're playing different games. I know I saw like Kyle White and a couple other people like comparing them on like, hey, enterprise value versus revenue versus what they're trading at, and just basically saying like Palantir is richly valued. I get why, because of the space that they're playing in. Basically, that was, I don't know, maybe I'm turning into a boomer, but like that was a big reason as to why I sold. It's like I got spooked by the valuation, and I was worried that if those margins didn't turn around by AIP, then it would be like a straight shot down. I doubled, down at the $8 range. So I was heavily up on my position. Everything else was kind of in the red. And I was like, hey, you know what? I'm going to flip this into SoFi. I can't fucking predict SoFi to be a broken stock. And it's been like that even after we turned profitable. So, we're going to see what happens. But again, this was like a 1% position for me. Did I miss out on, like $4,000? Who cares at the end of the day? Like, seriously, who cares? SoFi is like 40%.
What did I tell you?
What's that?
When we talked, what did I tell you?
Never be mad about taking money or taking gains. Nobody got broke taking the profit. So
yeah, congrats on the profits. And there's no hate. Like, honestly, I'm going to wait until, because, I love SoFi and I'm in SoFi big too. I'm going to wait until SoFi goes up 20% on a day. And so, you don't kick somebody while they're down, right? Like, SoFi is going down, Palantir's pumping up. You wait until SoFi pumps 20% and Palantir's down 4% on the day. And you're like, hey, this is awesome. Let's check on this bet. Oh, sorry, Tevis.
Yeah,
I will do that. I will be that guy in love. But, I love you. And SoFi, like, it's going to have its day in the sun. Like, this is a great company. I actually bought more SoFi today. That was the only only shift I did. Actually, I sold covered calls, too, on Palantir.
Well, here's the thing, Ben. Like, I think
dividends.
Yeah. Man.
Hold on. You sold covered calls also on Palantir?
Oh, yeah. 35 strikes for June. I think I got $80 per. It's just like ridiculous. Like,
I went 40 strike and got 47.
$80 per. So I was like up a lot of money, and I'm thinking, okay, Palantir, I believe in. They're executing extremely well. Could it go to 35 by June? I mean, maybe
it could. You roll out.
I'll roll out if I need to. Like, if things have like continued to just pump and accelerate and they're just going crazy, I'll roll out. But if it's like, hey, we're just doing this basically on hype, I'll probably take a little off the table at 35. Not much, but just a little bit. But man, the premiums are just ridiculous right now. It's great.
I mean, at a $35 stock price, you're looking at a $75 to $80 billion market cap. I mean, it'd be prudent to take some off the table at that point for sure.
Are you fucking kidding? I don't know, man. Maybe we live in La La Land. Like, if Nvidia is 1.7 trillion, then why can't Palantir go to 70 billion? I don't fucking know anymore. Like, I just don't know.
For what Palantir is and how they're executing, how they're accelerating, I think they're, on fundamentals only, they're richly valued, but I think it's fair. I think it's apt, just because people see the potential, they see the acceleration, they see the execution, and AIP has solved everything that was wrong with this company, frankly. Even the margin efficiency is just amazing. So I think it's warranted here at 35 in June. Probably not. Like, that's overvalued. I'll be along for the ride, but yeah, so with PayPal dumping, with Palantir pumping, I don't know, I'll probably be at 85% Palantir. Like, if this keeps up through the week, just I'm okay with that because it's a great company at this price. But yeah, let's say this keeps going and goes through 35 and goes up to $40 in June. It's okay, I'm at 95% PayPal, or not PayPal, Palantir. I need to make some slight
Roy, you're going to like what I have on the screen. And
I'm going to throw it up in just a sec. But Roy, one of the things that really surprised me was your tweet when you were like, my 70% of my portfolio that's PayPal now has turned to 80%. And I was like,
Palantir,
80% of your fucking portfolio in Palantir. I thought I was crazy for having 50% in Tesla and 30% in SoFi. People were like, what the heck? And then you're 80%, and then Arnie is 100% concentrated. You guys are fucking nuts, all of you guys. I don't know.
So,
Steve.
Does this need to get bigger or not?
Yeah. Zoom.
Real quick, before you jump in, just to respond to Tevis. So I was 90% when we were down in the low single digits, $6 or so. A lot of those were leaps, and I sold the leaps, bought other things. I've added funds. The thing is, it's one of those things, if you bought Nvidia at 140 or whatever, if you haven't sold a lot of the stock along the way, it's going to be a huge chunk of your portfolio because it's outperformed. Palantir's done that for me. I've sold leaps. I've invested that in other positions. I've invested new funds elsewhere, and they've done well. They just have not taken off like Palantir. So, but I have an outsized conviction on that. I would prefer other things to catch up. I'm not planning to sell, but so it's 50%. 50% is about where I'd like it, because other things grow. But man, if it keeps running, okay, I guess.
Dude, Steve, give us one more Zoom. I think that I don't know, maybe this is the hill that I will die on in the Twitterverse. Maybe I sold at a horrible timing, but I think directionally it was still a valid play, logically speaking, because there's a lot of people right now that, because SoFi is trading in this channel and is broken and Palantir has gone up, it's just a matter of okay, let's be real with ourselves and say, how much further can it go in the immediate short term? And if we sell Palantir today and buy SoFi, you can arb so much of that difference because SoFi has such a runway ahead that Palantir has already had those gains in the short term again. And so I'm just saying, how much of that future gain are they dragging forward today? I don't know, though. That could be wrong because people get you for it.
I'm going to answer that right now for you. But remember, nobody ever got hurt taking a profit. Don't beat yourself up. You made money. That's a good thing. So don't beat yourself up. So some of these companies have not reported yet. Okay. So this is all TTM, probably half reported. But if you look at the multiple on free cash flow that these companies are trading at, you have the largest enterprise software companies, Adobe trading at 40 times, Intuit 41 times, Workday 48 times, SAP 36 times. Palantir, after the run-up, is currently trading at 74 times free cash flow, okay? If you look at basically a 40 multiple on free cash flow, because that is what the larger companies are trading at. I got to zoom out just a little, get all this in there. If you put them at a 31.4 price of free cash flow, because that's what Salesforce was trading at, okay? On 1 billion of free cash flow, that is a market cap of 31.4 billion. At 5 billion of annualized free cash flow, that's a market cap of 157 billion. I'm looking at Palantir as a 5 to 10 year horizon. I think they can get to 5 billion annualized free cash flow. High end of guidance for 2024 is $1 billion. That would put the share price at 71.78. Now, if they started trading at a 40 multiple, which is significantly lower than the 71 multiple that they're currently trading at, and they get to 5 billion annualized free cash flow, based on the amount of shares outstanding, that could be a $91 price. If they get to more, if they get to 7 billion, could be a 128 price. Like this could be a 3 or 4 or 5 or 6 bagger. But I'm not saying that's going to happen next year. I'm not selling unless something happens negatively because I can't call bottoms. But I stand by everything that I've said about thinking Palantir has the potential to be the second most important software company over the next decade behind Microsoft. And I think they can have an Adobe or Salesforce arc in free cash flow. And these numbers make sense to me at these multiples because this is what enterprise software companies trade at. I mean, shit, the market's giving Snowflake 100 times free cash flow. It's giving Tesla 135 times and MongoDB 372 times. Like that's nuts.
Yeah, dude. But like, I think
No.
it's like a fallacy to say, oh, the market is drunk and giving these stupid fucking multiples to all these other stocks. Therefore, Palantir should be at $80 or whatever. Like,
but it's not it's not just some other stocks. Every company in this sector, the lowest price to free cash flow is 32 times. So
yeah,
what I'm saying is
that's a problem with the market. It's not a feature of Palantir.
Well, you can look at the market as being overvalued, or this is what people are willing to pay for profitability.
I don't know, man. I lived through 2021 and that shit sucked because everything went parabolic and then everything lost 80% of its value. So maybe it's scar tissue, but I think that the market gets it wrong from time to time. We are approaching extreme greed territory. All the indices are like hitting all-time highs. Nvidia's at 1.7 trillion, higher than Amazon.
But at the same time, like 2021 was a much different story. We had companies that were not profitable being valued at $50 and $100 billion companies.
Okay, so now we have companies that are growing like what, under 20% or 20% ROI. You can keep me honest, being valued at however many. Like what is their even valuation at this point, Steve?
Who, Palantir?
Yeah.
Oh, and I'm not saying that Palantir's valuation today makes sense. Okay. I'm saying that if in 5 to 10 years they're generating 5 billion annualized free cash flow, it would not be uncommon for them to have 150 or 200 billion market cap.
Sure. Yeah, no, I'll meet you halfway. I agree with that.
And that's what I'm saying. I'm not saying today's valuation is going to stay or it makes sense. It's 73 times free cash flow is expensive.
Yeah, no, I'm just laughing at this comment. And
I think it'll continue to fluctuate, right? I think you're both right. I think it's overpriced today, but I think what is really happening is, and what I was always doing is I was kind of sandbagging the potential for adjusted free cash flow margin. And when it comes to that, I was always like, okay, maybe it gets to 35. Well, it's already kind of getting to a place where they're starting to see quarters of 50%. So if their OPEX continues to kind of remain prudently low as they continue to grow, then that means their margins could easily get to 50%. So when you have this $10 billion revenue that I was kind of forecasting by 2030, 2032, yes, it's far away. Yes, you need to get 15 to 20% growth in order to get there. But that means instead of being a $3 billion free cash, you're looking at $5-6 billion in free cash. That's something where you're like, holy shit, the numbers just doubled very quickly. And I think it's going to take some time. Yes, you're seeing some excitement in the price right now. Yeah. And yes, there'll be some retracements for sure. But I think what you're trying to see is flushing the people out that were thinking this is going to be a 25-30% adjusted free cash flow margin. And people are now realizing it's going to be potentially 50%, and they're shitting their pants in a positive way, like I am. And that kind of puts my previous analyses on its head, because I was looking at $3 billion in free cash by 2030. And now I'm thinking, shit, should I be thinking of 5-6 billion?
Right.
What's to stop it at 50%? Why isn't it potentially going to go to 55-60%?
Yeah. Sure. But like, I think just, Matt, I think you nailed it. And really, in my mind, at least how I'm framing it is with heavy parallels to NVIDIA. Like NVIDIA goes from, revenue goes from 4 to 8 to 12 billion or whatever. And every subsequent quarter, because they're posting all of these numbers, the people start to project outwards and to say, okay, well, 1.7 is actually not overvalued for NVIDIA. It can go to 10 trillion, like, you know, and like people just go outrageous because they expect this like linear progression upwards. And it's not always going to be like that. Next year, they're going to have really tough comparables. It's going to be hard for them to grow. AI, really, we don't know. Like, we haven't dug all the way to the bottom yet with AI. We don't know where that, like, how big is the you know, pool. And so my point is that, like, I agree with you guys over 5 to 10 years. I agree with you guys that AIP is going to be huge. I agree with you guys that margin expanding is important for the growth story. And I'm bullish on all that. I'm just saying that at this price today, the excitement has gotten ahead of the execution, and the anticipation is pricing this thing to perfection. As a result of that, a lot of the future growth is being dragged forward. That's it.
Would you think that I would think NVIDIA is expensive?
Yes.
Pull up my screen. I actually don't think it is.
And after this, I want to respond to you on Palantir.
Yeah, just real quick, Roy. So like 42 analysts are calling for $12.31 of EPS this year. 46 analysts are calling for $20.70. This is without any revisions based on what Jensen's going to say in 2 weeks. 2026, you're paying 27 times earnings. This is cheaper than Amazon and Tesla right now. Like, this is not crazy.
Yeah, but Steve, my entire point is if Jensen comes out in 2 weeks and is like, hey, we expect it to grow at 100% and we grew actually at 70% because there's not as much demand as we initially thought, this thing is falling like a fucking rock.
Oh, it's getting chopped in half. Like, yes, and I agree with you. It's priced to perfection, but I don't think it's overvalued if they hit these numbers. That's all.
Sure, but it's a capital lift. Go ahead.
They're making assumptions where if they screw up, this is like 250 billion, 500 billion market cap's gone.
Yeah.
So with Palantir's valuation, I actually think they're just catching up to where they should be. That when I was looking at them in the 16s, I'd only sold covered calls, done nothing else with my Palantir position for, I don't know, a year and 3 months, something like that. I think I might have bought 3 shares at one point, you know, but that was it. And I was looking at it, I'm like, it's undervalued. It is. Bought in, and it was more significantly undervalued than I expected. Now, here's why I think that. You know, we already talked about AIP, and it cured their sell strategy. It used to be an insanely long sell cycle. Didn't seem to be a particularly high conversion rate. They're only able to do a certain number of these. And so they, in quarter 4, I believe, it might have been in quarter 3 as well, they basically did, as far as these boot camps, the same number of presentations that they would have, or pilots rather, in the entire year previously. Now, for the year, and help me out with the numbers here, Matt and Steve, I believe that they did somewhere over 500 boot camps, 560. Is that ballpark right? And they were guiding for doing, I think, between 1,000 and 1,500 this next year. Mm-hmm. Now, let's back up a minute. They gave us an update in, it was either October or November, on the number of boot camps. They were in the 3s. They were hoping to get 5 by the end of the year. They, of course, smashed through that. For them to count these customers, they have to have paid them some revenue. They don't count as customers otherwise. So when they're showing the customer count, when they're showing the deals that were reached, these are probably not factoring things that were done in December. So they may have had maybe 400, 450 total boot camps. They're going to do 3 to, pardon?
I have the number for you.
Perfect. Give me that.
Yeah. So in October, Palantir set a goal of executing 500 AIP boot camps within a year, and have completed more than 560 boot camps across 465 organizations to date.
Perfect. And so this next year, they're doing, if you include December, which that revenue, those deals, if they struck them, they haven't really hit yet. They're basically doing 3 to 4 times the amount of boot camps that they did through November. So this is their sell strategy. We see what they executed on. They had 70% U.S. commercial growth. They're growing. They're guiding for 40. Typically, they're a little bit conservative. They probably should be. You look at the quality of the clients that they have as well. Meaningful acceleration, not just in the 1 million deal range, but in the 10 million as well. These are significant clients. The ones that they mentioned in the earnings call, This thing is going to grow like a wildfire this year, and that's what they're beginning to price in. It is not priced for perfection at all. If it actually grows far faster than that 40% U.S. commercial, and if government revenue does accelerate, that is a bigger if. I think the commercial is not. It's actually not a price to perfection anywhere close.
And
There's
Roy,
a lot
let's not forget, sentiment and buyers coming in is a real thing. And institutional buyers
Sure, yeah.
are going to come into Palantir now. And they will be in the S&P at some point this year. Whenever they rebalance, they're probably going to get included. That could happen in March.
Yeah, I think it's
When that
all
happens, you have S&P funds and total market funds that are going to be buying it.
Yep.
Institutional investors are realizing this isn't a black box. This isn't a scam. This is a real company, and they're going to be buying. Like, we may be seeing, and I hate saying this because anything can retrace and go down.
Yeah.
We could be seeing a new floor. Before, the floor was around 14, 15. That floor may have just gotten raised to like 19, 20.
Sure. Yeah. Yeah, man. Look, let me ask Matt, did you have anything to comment before I ask this question, or should I go?
The only thing I was really going to say was I'm really looking forward to seeing what potential net dollar retention does. As you see a lot of these new contracts that are being rewritten, is those obviously a lot of those are, $100 million in deals this particular quarter alone that were closed. How much of that is actually going to be top 20? And I think you've now gotten to a place where there was a lot of historical contracts that have been signed up over the past 20 years, mainly UDOC and maybe some of these other companies that have kind of had these top 20 revenue deals. And I think eventually you're going to see a place where some of these old historic top 20 clients get dethroned by some of these new contracts that are coming in. And so I'm really excited to see, the net dollar retention, which I anticipate is anything older than 15 months. Because obviously you can't do a net dollar retention on something that's less than 12 months, but it's going to be difficult to do anything that just hit 12 months. So you probably have a 15-month sort of minimum in terms of contract value to be able to live that. So I'm curious to see if you see that net dollar retention continue to grow to the up and to the right, because it has been slowing. I'd love to see it get back to 115, 120%. So coupling that with just overall 20% growth, I think that's going to be what the potential fire is for me. And so that's what I'm looking for now. I think the customer count growth, I thought the total customers could have grown a little bit more. But overall, I think what you're seeing is with those 100 contracts that they signed, more deals for companies that are already installed to double down and include AIP into their suite. And I think once you have a little bit of that and you get a little bit more use cases and people having the ability to come to AIP cons and stuff like that to see how they're implementing it within their businesses, I think you'll have a lot more people come on board and be wanting to go some of these boot camps. So I still think it's early, right? It's less than a year after AIP has been introduced, and the fact that it's had this much of an impact and you're starting to see that reacceleration that everyone was really starting to scratch their head, myself included, now start to be like, oh crap, where does this reacceleration end? Does it end at 25%? Does it end at 30% in the next couple of years? Where are we going to see that? Right. I'm still cautiously optimistic and I don't want to get ahead of myself, but things are trending in the right direction. Although I was a little bit underwhelmed by the total customer count growth. It made up for it in the total deal counts that I saw. So anyway, just some food for thought.
So let me just bring this to the panel, because Steve said it can form a new floor. Matt said we're just getting started. Roy basically echoed that same sentiment. And I feel like you guys, again, I'm neutral. Okay. I'm neutral. I'm playing devil's advocate and I'm trying to hold it down against 3 fucking Palantir bulls. And maybe I'm kind of salty about the comments that I was getting on Twitter today. So I'm taking it out on you guys. I apologize and I love you. Now,
give me the bear case.
We're all members. We can take it.
I also think that you guys are projecting linearly in terms of these revenue, and it could go exponential. It could absolutely go exponential. It could also fall off a cliff. It could, but as a result of that, your heads are getting so hot, like you're going like a hot air balloon. You're just going fucking up, up, up. This is the question I want to ask you, okay? Because you've seen this company expand their margins over time. I think it was 13 to 17 to like 20. as a result of AIP. But for somebody who is not in Palantir at all, would they buy? Should they buy here? Make the case. If they had no position at all, with just this earnings was their first earnings call that they ever listened to, should they buy here? Because I think that you guys are so bullish, but you're all sitting on cost bases that are like $8, $9, $10.
So this is what I would say. If I did not own shares, I'm not going to answer for anybody else. I have personally bought shares around this price point. Okay. I bought shares the first week it was public around 9.25, that area. I bought shares probably as high as 23. I bought them all over the map. I have a bunch of shares. If I did not own a position, I cannot call bombs and I cannot call tops. I would probably scale in, and whatever number I wanted to invest, I'd probably buy 10 or 15%, see if it goes up or it comes down. If it retraces, I buy some more. Same thing I'm doing with Tesla. I mean, Tesla I'm scaling into because I don't know what it's going to do. It keeps going down. I keep buying more. But, I mean, if you listen to what Dan Ives said when we interviewed him the other day, maybe that's making me more bullish, because what he said about companies in IP is pretty fucking crazy.
Also, like, what a flex of a statement, hey? When we interviewed Dan Ives the other day, look at you, motherfucker. I see you. Right?
Esteban, he's legit. Yeah. And people were like raving about how awesome Steve is, like on the spaces, and I'm like, they're right. And somebody was like, "Hey, Steve's better than her." I'm like, "You got that right, buddy." But
dude, I cannot light a fire with raindrops. Okay,
my one talent. But no. So if I had absolutely no position, and I have a friend in this position, and I have a sister as well that she was interested. She has been interested. I would just basically say the same as Steve, that I would not go all in here. I think it would be a mistake if you're like, hey, I want to invest $1,000 in Palantir. If you did all of it right here, I mean, it may work out. And if you're here for 10 years, it's going to be probably really good. When something has run this hot, even if it's for fundamentally sound reasons, which I think most of it was yesterday. Today is like, I don't know. we're pushing it. As we hit 25, I'm like, okay, it's really hot. Like, but there's a reason for it, right? So I would, if I didn't have a position here, I had $1,000, I'd probably just buy 100 of it tomorrow, and then next week buy 100 worth of it, and just keep doing that. And if it, I think it will probably retest 20 at some point. I really think it will. It may be a week, it may be a month, and it may just not. But the whole market is kind of hot right now. Palantir is hot right now. I don't think Chris's play, and maybe we'll talk about that in a bit, is going to work out very well for him at all. But if I was DCAing, I'd just say, hey, DCA, if it touches 20 and breaks under, if it's like 19, I'd probably start allocating a little more aggressively. If it goes down to 17, for me, that's like Palantir when it was back at like $6. I would just, at that point, just say, all right, everything I want to put in there, I'm just going to put it in there right then. It could go lower.
Jump. See you later.
Dude, 17 is like, and we were just here before earnings. What the earnings told us is this company is not worth 17. It's worth a lot more.
Okay. Matt?
So I think I see where everyone's kind of coming from. I'm not buying Palantir shares here, right? I'm buying things else in my portfolio that are better valued. Do I think that this could be a store of capital? I think that, if you're looking 5-10 years down the road, do I think this is going to be $150, $200 billion stock? I have more confidence in that today than I did. I still don't necessarily know beyond 150 to 200 billion where it ends up. Is it actually the next Microsoft, like Steven was saying? I've kind of always thought that since I started using the products in 2016, 2017. I think it's something that's completely wildly different that every enterprise should use. But I work at an engineering company, right? We focus on engineering problems. And so, there's people that literally are just button pushers and Excel junkies, and that's all they really need to do. Do they need the big complex problems of having thousands of oil and gas wells scattered across the globe and needing to know what their pressure looks like at every single source for regulatory reasons and more, right? So I don't know if everyone's trying to solve the problems that I'm trying to solve, is what I'm kind of trying to say. And so maybe my bias is there. I think that there's other opportunities out of the market right now that are easier pickings. And, you know, not to say Palantir is a bad one, but I think, you know, it goes back to, I honestly think that the stock will kind of come back in price, but I think it's also depending upon what kind of investor you are, how new you are to the market, and things like that. I mean, this is going to be a very tough stock for the beginning investor to get into, because going back to what Tevis has kind of been preaching, you know, as kind of the token bear for this conversation, this is going to have volatility. And if this is something that you're not used to, your emotions might get absolutely shook, and you might sell at a loss, even though you know, it might not necessarily warrant it. And so I think there's something to be said about that. And just because you see a bunch of people on here that are excited about the stock, dude, like I was down probably 50% on my position at one point, and I didn't care. I was, you know, to me, it was like, maybe I lose whatever it was, 20 grand or whatever I don't remember really what it was, but it was like, what happens? I lose 20 grand. It's 20 grand, but that's 20 grand to somebody like me who's been investing for 10 years and, you know, has established himself as a portfolio. If you're kind of looking at that being like 20 grand is a lot of money to me, that'll put me underneath the bridge. Like, you know, that's a different story. That's a conversation you have to answer for yourself. And I honestly think a lot of people are jumping to both feet into a pool like we're looking at and being like, SoFi is going to be my get out of jail free card. Palantir is going to be my jail get out of free card. To start with the basics, you know, if you really honestly want to talk about something like this is a broader conversation. If you're just getting started in investing, get the get the tool and the pathways down of saving $500 a month. That's going to be better for you in the long run than trying to time a Palantir, right? If you're able to focus on just getting $500 into the market, whether it's the SPY or whether it's just a personal savings account, even just working that muscle, I think is the thing that's going to put you in a different spot compared to your peers than trying to just, I have a buddy of mine, like I was super excited. Like this is a good story to potentially start off with. I talk to him every couple days and he was so excited to see Palantir was up and he keeps asking me about it. He's like, dude, Palantir, it's fucking great. Like, holy shit, do I sell? I'm like, I don't know, man. I wouldn't sell. Like, let's talk about some cover calls. Like, he's like, what do you mean cover calls? I was just like, I was like, that's what I'm doing. You know, 40 contracts. I sold some cover calls. You know, we're making a little bit of money that way. Instead of selling the position, we're collecting a little bit of a premium. And so we're not trying to really time it because obviously that would, you know, trigger a tax event, etc. I was like, you have more than 100 shares, right? And he's just like, no, I have 20 shares. And I'm like, dude, like, what do you talk? Like, we've been talking about this for months. And so it's like you could talk about it till you're blue in the face, but you really need to start with the end in mind. Sorry, I'm going a complete tangent, but this is valuable shit. You need to start with the end in mind. Like if you want to get to 50 grand, backtrack yourself. Say you want this position to grow to 50 grand. You can't buy 20 shares and expect to get a 50 grand position in 10 years. This is not how it works. You have to look and be like, to get to 50 grand, and I think this is going to 5x, you need to put $10,000 in. Right? Like just be prudent and honest with yourself. I think a lot of people aren't doing the math here and they think that they could put $20 into Palantir and walk away a millionaire in 20 years. That's not how this shit works. You have to work the muscles. You have to be you have to think about like a millionaire before the numbers show up. You have to make sure that, like, if you were a business, right? Think about Palantir. Say you only put $20 in. You're like, okay, how much revenue growth do you need to see to grow revenue from $20 to $1 billion, right? Like think about your life like a business, right? You need to feed it. You need to give it capital. You need to harvest it. You need to, so it's unrealistic to say, put $1,000 in and think you're going to become a millionaire. Like that's 1,000x. You literally have to add another 1,000 and another 1,000. Eventually gets to a point where you only have to 10x or 20x your money before you really get there. So anyway, that's just a food for thought. Don't rely on one stock. Think about, make the right investment decisions every month. It's not a one-time fits all sort of thing. This is something you have to do and harvest over the long term.
And really quick, I'll just add on that. If you don't know Palantir, you just know the ticker. I mean, you can buy it, do what you want. If you want to, that's fine. And maybe as a trade, that'll be great. But if you want to invest in it long term, you need to study this company. This is not an easy to understand company. Follow Matt, follow Amit, follow somebody that's talking about it regularly. Listen to the earnings calls, learn how to do that. If you've never done that before, you got to start somewhere. You'll be fine. Like there are a lot of things you want to understand, but there's some that you will. And that way, let's say if Palantir had the exact same earnings and instead it did the opposite, that it fell 30% and then it fell another 8%. If you bought in this company and you're in the 16s and it's suddenly like $12, you're like, forget it. I made a terrible mistake. I'm selling. Unless you had the conviction that was reinforced by actually looking at what this company was. If you were studying this company the way that we were, the way that even just like Tevis would have understood it. If it fell at like $11 and did it what it did in earnings, you would have been at least interested, right, Tevis?
Dude, I literally still have videos on my channel that says Palantir to 200 and doing the math of how it gets there. But that's like over a decade plus. And what I saw was this thing going from 8 to 15 to 20. And I'm like, whoa, Nelly, like hold on right there. Because fucking SoFi over here, which is 40% of my portfolio, isn't moving. And I'm like, okay, I can arb this difference. Yeah, maybe stupid because I'm trading when I'm supposed to be long-term investing. I get that. But the entire thesis is that it's pulling growth forward in the stock valuation. And that's perfectly represented by the fact that I asked all three of you guys, you were, Palantir this, new base, all this stuff, $80. And then I asked all you guys, would you buy it here for the first time ever? And all three of you guys withdrew. So all three of you guys, whether consciously or subconsciously, are telling me that it's short-term over fucking valued, period.
No, I said I'd buy 10% of what I wanted to buy right here if I did not have a position. And I'm not backing off on that. But I have a position. I'm not going to add.
Roy, this is recorded. That's
exactly what I said. I said $1,000. I'd put 100 in, and I'd do 100 per week.
Right. So,
but you're right. Like it's not the best entry. But if this was a company that I'm like, hey, I want to be in long term, I can't guess a bottom any better than Steve. I'm not Chris Patel. If I was, I'd probably wait. I'd just like snipe it. That'd be great. But no, I would start adding, but a little bit gradually. And as the price fell, that amount will actually carry and buy more shares. So, but don't go all in here, please. unless you can stomach a 25% loss. We could lose 25% between now and Friday. We could.
Yep.
Yeah, and Roy, if we lose 25%, that would be like Palantir in the sixes, right?
No.
Come on, man. Come on.
25% from that. No.
Dude, did you see Chris Patel with bought puts?
I did.
I did just see that.
Isn't that wild?
Screenshots of that.
It's a mistake.
Doesn't that stick out a little bit too?
This
guy called Verizon. This guy called, what was it, Dutch Bros or Wingstop. This guy is, he fucking timed the bottom and the top of SoFi, and he's gonna call Celsius because I'm in with him on that one. Really, he got puts on Palantir. That's interesting. I'm not saying it's not going to go to where you think it's going to go in 10 years. I'm just saying that this Palantir at $23, I would have expected this to be the case maybe by the end of this year, after S&P inclusion, maybe, halfway through 2025.
The thing is with the puts piece is you don't necessarily, just like calls, right? You don't necessarily need the stock to go to that price to make money, right? What you need is a quick reversal. And so what I think Chris is valuing or betting on is he's put, I don't know what contract he bought specifically or what strike and what expiration date, but you just need a quick reversal for the contract value to go up 20, 30%. And that's probably what he's looking for. He's looking for something that is going to pull back to $20 and he's going to sell out. He doesn't necessarily need it to go to the strike price of $16, $18. He's just looking for that reversal and playing off of that. And I can't blame him for that. I honestly am surprised it's run up to just under $24. I think it's supposed to be probably pulling back.
Insane.
Insane. So, I mean, I don't wish the price to pull back for anybody. I wish it goes to $1 billion, but at the same time, reality is reality. And I think you've done a phenomenal job kind of poising that sort of real sentiment that I think people need to think about. I think sometimes they lose themselves in these things, but let's just be honest, the market is what the market is. It overvalues, it undervalues. The market is never 100% a great valuation tool. There's so much at play. There's people that are day trading the stock, long the stock. There's institutional investors that are coming in. There's people that are shorting, that are buying back their positions because of the news that what happened on Monday. So there's a lot of different things at play. And once you have the opportunity for things to kind of settle out, I anticipate at the end of the quarter before next, we'll probably be back closer to 19 or 20. So I definitely see at that point a 20 to 25% pullback in the stock.
Like, guys, please don't misunderstand me, and I'll say it as bluntly as I can. I fucking love you shitheads, and I hope you all make money and win big. Trust me. If Palantir goes to $500 tomorrow, it will not hurt my bank account. It might hurt my ego, but it will not hurt my bank account. And I hope that it goes $500 because I would happily hurt my ego for you guys to fucking be rolling in it, because you're going to invite me to your yacht and it's going to be great, and that's fine. I'm just trying to present a devil's advocate. I'm just trying to basically highlight this point right here because, and only because, I have been burned in 2020 and 2021 buying shit on the forecast of continued growth, and then rates were jacked, and then the rug was swept under me, and I'm sitting on, negative 50% losses or negative 70% for a couple of my positions. And so I'm like, okay, what did I learn? What was my pricey lesson? Valuations do matter. The market is irrational and emotional, and sentiment changes on the drop of a dime. And so that's all I'm saying.
Yeah. So, and I agree with you. Like it can absolutely pull back. If someone does not know Palantir, they probably shouldn't buy it unless they just want to trade, or it's a small bet. It will pull back at some point. Like it can do whatever at this point. I don't know. It's uncharted waters. That's why I sold covered calls. Chris's bet, it makes sense for him. For him, he spent basically $5,000. For him, that's like Matt's friend that bought 20 shares of Palantir. Like, if Palantir went to zero, that's not going to ruin that guy's life. If Palantir goes to 10 billion, it's not, losing $5,000 is not going to ruin Chris Patel. That's chump change for him. The thing is, when you are, so he said this is a macro bet, not necessarily about Palantir. I don't believe him, honestly, because there's other companies that are fundamentally overvalued that have not executed like Palantir, and that are not in the middle of this AI hype cycle. Like, I wouldn't say it's a bubble yet, but it's a hype cycle, and you got to be careful when a company does that. We've seen that case in point with NVIDIA. This isn't NVIDIA. It's not going to do what NVIDIA did, but it's a risky bet. Plus, when something is run up this far, it can come down really fast, but if it doesn't, if it comes down even just slowly, the premiums that he paid on these are just like my covered call premiums that I sold. They are rich, they are spicy, and he just through theta decay and through IV settling down will begin losing money. So it's not a risk-free bet at all that Chris is doing. I think he's probably right that I again think it's going to go back at some point and test 20. I think it has a strength to hold, but a lot depends on the macro. So we'll just have to see. But if you're new to the stock and you have conviction, just DCA slowly, put in what you'd like, keep learning about the company. And Tevis is right. Like, don't YOLO and go all in on it tomorrow unless you really want to. But man, that's risky.
Yeah, there's other things out there. Like if you want to know what I'm looking at, I honestly, I think, Steven were here, he probably already said it. I mean, he's looking at a lot of SoFi. He loves SoFi. Just like, he talks to you guys every week about it, right? I think that's a steady stock that I think right now is undervalued compared to what you're talking about here with Palantir. And then, to me, another one that I like to look at is Rocket Lab. I think there's a lot of potential associated with that. And I think right now, the upside potential of a stock like that, yes, it might have a little bit more hair on it because it's not profitable like a Palantir. But Palantir's valuation right now is just extremely, extremely expensive. But hell, I mean, even if you're looking 5-10 years down the road, the thing that is guaranteed almost is the S&P 500. And I think a lot of people still, that you could try to stock pick your way to the moon, but there's always going to be black sheep events that happen, or not black sheep, black swan events, events that, wrong animal, that unfortunately come in and snake up any sort of gains, or just absolutely destroy a stock, right? And it could just be a natural disaster, it could be a regulatory event, it could be an antitrust event with something like Google or Amazon. So you can't predict some of this stuff, and unfortunately, the thing that can really safeguard you from that is something like the S&P 500, because you're spreading that risk then across so many different stocks that you're not concentrating capital into one. But at the same time, I think that if you're smart and prudent and you do have the opportunity to put a lot of dedication and love into this, and it's something that's a hobby for you, like for me, like people might be like, I'm going to go do X, Y, and Z for my hobby. It's like, this is my hobby. This game is my hobby. This is where I'm putting my time. And when I'm at home in front of the computer, like I'm talking on these podcasts, I'm literally researching these companies, I'm reading their balance sheets. Is that not you? That's not you. That's okay. Like, you don't have to do that. But I think if you really want to win at this game, you really have to put in the time and sweat equity that, the Buffetts do and many others, right? To be able to find those things that are potentially true outsized returns. And regardless, you're always going to get some of them wrong, but you have to recognize, over time and hone in and mature your skills, but also just be true to yourself with respect to personal finance and understanding, just because it's right for Tevis, just because it's right for me, doesn't necessarily it's going to be right for you. Like I have 4,000 shares of Palantir. It could go to zero tomorrow. It'll suck. I'll probably shed a tear because I have so much thought and potential that I think is going to be going into the stock. But at the end of the day, I'm not going to lose my house. I'm not going to lose all these other things that, unfortunately come with losing whatever, 95 grand or whatever it is right now. Like it's not that big of a deal. At the end of the day, it won't really hurt me. So that might be something you're sitting there being like, oh my God, like if I lost that much, I would like completely lose it. I'd, go belly up. I'd jump off the balcony. Like you have to invest for yourself and where you are in your investment journey. I've been doing this for 10 years. So, that amount of money, yeah, it'll suck, but I've positioned my portfolio to the point where if that position, I'm not like these guys that, have 70-80% of their money in it, right? If I did, then I would probably be a lot more upset. But anyway, just some food for thought, right?
And yeah, I agree with Matt too. Just to echo that, I had a conversation with a friend. He's 26 or 27, newly married, has a baby. He's an underwater welder, so he makes good money, but he works crazy hours. And he didn't know I was in stocks, and so I was talking to him. I was like, "Hey, what are you doing?" And he's not doing much. And I'm like, "Okay, let's talk Roth." And so we talked about the Roth, and we talked about just the S&P 500. He's like, "What's that?" Okay, well, let's talk about that. And I was like, "Hey, why don't you figure out between you and your wife what you can do as a budget? Give this amount of dollars per each paycheck, invest it in the S&P 500. Are you in Robinhood? Yeah. Okay, great. Just do it through that. You can set that up real easy, and just forget that it even freaking exists. And like years down the road, if you're like done with the underwater welding and you're like 38 and you're like, okay, I want to start learning some stocks and individually, great, do that. But don't do that when you don't have time. You just bet on the American economy. And Tevis, I wanted to say one last thing here too. You made a bold prediction October 31st that SoFi would outperform Palantir going forward.
Yeah.
From this point through October 31st, based on where Palantir is and based on where SoFi is, I think you're right from here on.
Before you jump in, I unfortunately had to leave for Cash Flow Chronicles. Thank you guys for having me on Bootleg Weekly. I'll see you guys next week.
Thank you, Matt. Okay, so we can wrap soon. I know Palantir has a head start, and that's fine. I still think that SoFi is not completely out of the race. That might sound like a stupid statement to a lot of people, but again, one of the things that I was looking I do weekly videos recapping SoFi news, and as a result, I'm usually in SoFi related Reddit threads, just trying to find out whatever the news is. And people were looking at Palantir going parabolic, and they were like, "Why can't SoFi do that?" And then they were commenting. They were saying, "Well, look, for Palantir, for SoFi, it's going to be probably pretty similar to what Palantir did." Palantir dumped after its first profitable quarter. It went from around $7.30 to $10 and then traded back down to $7.50. And this kept happening, right? It happened from February 2023 all the way through May 2023. This was Palantir's first profitable quarter. And so I think that the market needed confirmation of profitability going forward for it to go parabolic, right? And so after the second quarter that Palantir went profitable, that's when we went straight to 15. And I think that a similar story for SoFi can play out, because essentially we need multiple quarters showing that growth, showing that profitability, and then we're going to get more institutional ownership to form a new base for SoFi. So, I think we can use that same Palantir playbook of what happens when a company turns profitable. It's not necessarily one quarter. One quarter can be a one-off, but multiple quarters is a confirmation, right? And the reason why I still think I'm in the running for winning that bet is because SoFi just has a longer runway to grow. Like if Palantir goes to $30 or $40, it becomes a harder and harder thing for it to do because it's getting unwieldy. It's getting so large in such a short period of time. Whereas SoFi is just trading at such a low valuation right now that SoFi could double and people could still make the argument that's like, it's pretty undervalued.
Yeah, I think that there's a road still for SoFi to triple this year. So it's not guaranteed. And the macro is rough right now with all the stuff that's happening in the banks. That doesn't help at all. Questions on when are they going to actually cut? Is soft landing actually going to happen? I still think that Palantir outperforms. I stand by that. But from this moment, like where SoFi is at basically what 7.6, 7.8, something, it's under 8. And Palantir sitting, it's push at 25, not before long. I think SoFi probably will outperform from now through October. I thought from the very beginning, when you made that prediction, I mentioned, and it's in that thread, I thought it would be fairly close. That Palantir, I didn't say this, but I was thinking Palantir might overachieve by like 10, 15%, which is not that significant. Not like it is right now. This gap, I don't think this will exist. If it does, I mean, I'm glad I'm in both, but I would be very surprised. SoFi is going to have its day in the sun, guys. And I know many of the people here are SoFi shareholders. I'll say it again. The only thing that I bought today was SoFi. I didn't buy more Palantir. I didn't buy Tesla. Mm-hmm. I didn't buy more PayPal. Didn't buy more Robinhood. Didn't buy more crypto miners. I looked and I was like, I need more SoFi.
Yeah. And look, I'll repeat what I said about 20 or 30 minutes ago. I think selling Palantir for SoFi as a trade was shitty timing, horrible timing. I wish I would have done the same thing right now because SoFi is pretty much at the exact same price, but I can't see the future, right? And we were at that point where AIP was still unproven. And okay, now they're proving it and they're increasing their margins and they deserve all the gains that they get. But essentially for me, at that point, before them reporting their third quarter, we didn't know if AIP was going to be as big as people thought. And I made a bet that it wasn't. And, so I think that the trade that I made was early. I think directionally speaking, it was still logically sound because of the runway that SoFi has for growth and because of how disrespected it is by the market in general. So that's my stance. I will die on that hill. And the Palantir cult on Twitter can clip that and dunk on me later.
We got our eyes on you, bud.
Okay. This has been the Bootleg Weekly, everybody. Second episode. I'm having a lot of fun with these episodes. We're probably going to keep it going, at least have a chat about it. We are going to be back with the SoFi Weekly on Friday at 10 p.m. Eastern. If you haven't done so already, drop a like on the video, and thank you for being here.